Hello, today is Friday, the 4th day of July 2014. My name is Derek. Welcome to today's silver chart analysis. Instead of taking a look at the daily chart, which has been the primary chart of the last few weeks, let's take a look at the weekly term time frame, which is encountering another gain for the week, but very small micro gains right now at about 8 cents or 0.2%. Market's still trading as I'm reporting this, but not really. Last week, the gain was 1% with volatility this week at a very low 2.5% for the week. Last week, it was also under 3%. And the last time 2 consecutive weeks would be under that level, well, you'd have to go back over 11 years ago to, you'd have to go back to, let me look at my notes, June the 27th, 2003. That's over 11 years ago that the volatility has been this tiny. And over the last 575 weeks, that's a long time, this is only days number 21 and 22 of having this high of volatility. And there's been almost 100, 99 to be exact, days or weeks, excuse me, over the last 575 with at least 10% volatility. The last time we've had volatility that large would take us back almost a year to September 20th, 2013. I'm guessing it would be this period back in here. Okay, so now let's take a look at some of the things within the chart. As far as low volatility is concerned, you could play it for how you will. For me, this is the ones and only ones who majorly control the market that have decided, yeah, we don't want to do much. And I use the word majorly control the market because if you buy silver, you technically are helping make the market go higher. And that may sound untrue, but if you go to a place like APMEX or any of these online dealers and you buy silver, well, they hedge their bets, and therefore they will have to cover the amount of ounces that you sell, and that helps the market go higher. Now, granted, they buy back, they'll short it and bring the market down again anyway. But with that being said, let's talk about these highs and lows. You have this key high and this key low. Major decline going from 35 down to 18. And then this high. Since this period, neither this high or this low has been taken out. And as I've said many occasions, to reverse this downtrend, get above this 18 average band, which will obviously and always establish resistance, come back to the band, and then after you come back to the band, you need to break resistance. Well, no. So instead, there's your support break, but it really didn't go down. It tested with a pierce above the previous low, but then that was it. Then the last time it got above it in here, same thing, comes back into this band, and well, it resists it in here for quite some time, but doesn't break down again anymore, and now back above it again. So it's got into a choppy market where it's going above, below, and right now above this level. I think for now it really does have to get above this key level of resistance, and there's going to be this one and this one. So 3 different layers of resistance that it's got to get by. But again, I'm going to be looking for this thing to hit this average in here, and then of course make it up towards these key levels. If, of course, this is going to be the start of that multi-month bull market. Down 40% here from this high. And at that point, when it was at 35, it was down 30% from the previous high. So it's down still close to, but not over, 60% from the 2011 and 1980 highs. Some interesting notes as far as unemployment and employment data that came out today. Unemployment rate goes down from 6.3 to 6.1% in the United States. Remember, those are the official numbers. I find it interesting to see full-time jobs down 523,000, but part-time jobs up almost 800,000. What does that tell us? And as far as some unemployment data, if you go to Shadow Stats, you'll see that in late 2009, that the Shadow Stats unemployment was around 21%. Now it's up to about 23 to 24%. The U3, which is the official rate, which is now, of course, down to 6.1%, was around 10% then. And then the U6 data, which was about, well, 10% or so, or maybe around that time frame, or 17%, down to 12.1%. I think there's a little fiddling within those numbers as well. But the labor force participation rate, just 1% above Fibonacci at 62.8%. That is extremely low. Of course, I've talked a lot about, well, not lately, but and every so often, I should say, about technological unemployment. It's playing out, of course, in full force, mixed, of course, with an economic model of fiat currencies that just gives the businesses, masses, and individuals, countries, difficult times. And we're going through, well, difficult times right now. Thank you for tuning in to today's video, and I'll talk to you later this weekend. Bye-bye.